Okay, as you can see here, I just got filled long at 1856.50. Now we have been in a down move here, and I'll explain a little bit in a moment why I've done this. But the software that you're looking at is from Day Trade the Markets. You can see our DTTM up here. My name is Dave Johnston, and the way we like to look at the market is through the lens of the auction process. So the market has come down today, but our intraday belief in how the market is moving is still upward. And so oftentimes when a market will come down, you can see here that, by the way, I'm just going to go ahead while I'm in this trade here, long this many. I'm going to go ahead and put in a sell limit order. I should have done that. I've been talking, but 56.50. I'm just going to go at 57.50. We just hit it there, but I'm just going to be modest here in my first expectation of just 1 point. I've got 8 contracts on here, so I'm going to sell 4 at 57.50. But just let me get back into so kind of explaining this trade. Is that you can see here, and I'll just use this arrow feature here. You can see that this was the low formed early in the day, and then the market had a nice rally higher. The low was here at 58.50, and the market reached, I think it got up to 71 and change, so it had a nice rally from there all the way up here, and then it started to sell off. And you can see here that we actually had, okay, we just got filled on that. So what I'm going to do, just to be on the safe side here, I'm going to go ahead and place the sell stop. Okay, we're going to sell stop on 4. I'm going to put that at 55.25 is the low, so I'm going to place it at 55. Okay, I don't think the market could very well come down because I'm long at 56.50. So that's we've made a point, and if it should move a point and a half against us, then we get stops. We'd have a slight loss overall on the trade, but I think I want to give it a little bit of room here. So I think there's some fairly good potential on this next portion. The next area up here would be around the 60 area, and I think what I'll do there on this trade location zone at 59.50, I'm just going to come in. We're long at 56.50, so I'm going to go in at 59 and just sell 2 of the contracts. So 1/4 of the overall position. And as you can see, our trade, what we call a high velocity move, which is this shaded area here. You see another one here, and then another one here. The top of this one is up here, and that's at a price of 59.75. The selling bar rate here is at 59.50, and I put my limit order in to sell it to 59 even. So, you know, I don't want to try and squeeze every last tick out of it here, but if I can get in at 56.50 and get out of 1/4 of my position to 59, that that's a nice little profit. And then of course I got the 2 runner contracts that I'll still have should the market get up and fill me on this 59 objective. So that's really what's going on here today. Now, I think the real reasoning here on trying to get long on this trade was that I was actually looking for some place to get long. I did earlier. Then we've had this good sell-off, and in our analysis of the market, we believe that the market is in an interday, inter meaning day to day, not within the day, but an interday up auction. And unless there's really heavy selling, and we're in an interday up auction, I'll try and go ahead and see if the market get rejected off of lower prices, and then try and get long, so that I'm matching up my trade direction with the intraday auction. Now, you can certainly make some good short trades on days that are heavily controlled by sellers, even though the intraday auction is up. So if the intraday auction is very heavily controlled by sellers, yes, you can still make some great trades on the short side. My kind of style of trading is I'm a little reluctant to do that, because once we have discovered that the intraday auction is in good form, and we really believe that it's got some good strength to it, then we're going to go ahead and try and trade on that direction. Now you can see here we've moved up against where the market has dipped. and I'm down to four well, I'm just trading four, but I think what I will do is go ahead and that area where it came down to there, I'm going to go ahead and try and get long four more at 57.75 where it just dipped to there. Who knows, I might be late on this, but we're going to give that a try. Maybe if I can just spread this out a little bit, perhaps can see it a bit better. That kind of thing. It did dip to that 57.75, and which, as you can see, is the top of this bar right here. You can see this bar. I'm just going to we came off of the low here, and you can see that the bar that made the low was a selling deceleration bar, and we know that because this triangle at the low of the bar, so the selling was decelerating. And then as the market came up, we had a nice blue bar here, which is aggressive selling, level 1. We have 3 levels. Level 3 is the strongest, so this is the weakest of the 3 buying aggression, but still good buying aggression. And you can see we had a deceleration right after that with its high immediately taken out. So that's the reason for trying to get long right at the high of that price. As I said, I've kind of been talking here, but a little late getting that order. I don't know if I would have been filled on that anyway, but we'll go ahead and as you can see, we've still got that order in here at 59 to exit 2. And okay, we just hit that there. Maybe we'll get fortunate, get filled on that. If that's the case, then I will cancel this order at 57.75 to buy. Should we get filled at our sell objective at 59? So that's kind of how I'm looking at the market right now. And when the market does come down, as it did in these fairly aggressive high velocity selling moves, we had 1, 2, and then the third one. The third one immediately started to trade above it. And when it came down here and tested and decelerated, immediately had its high taken out. The way we look at the auction process is that as the market came down and formed a new low on pretty aggressive selling, and had a bit of a bounce, as you can see right here, it decelerated about midpoint or so into the high velocity move, and then came off and made a new low. That's expected. However, if this gets rejected nicely, then you could have a nice intraday short covering trade, and that's really the thinking on this trade. Now we did get filled there, so as I said, I'm going to cancel this. No longer want to buy an extra 4 at 57.75. We are still long 2, as you can see. You can see it states it right here. So we're still long 2. So obviously I want to change my stop, and I'll change that down from 4 down to 2 because there's just the 2 contracts left. I'm going to go ahead and just place it a couple of ticks above where we got entered here. So you can see that we're entered long at right here at 56.50. So I've got my stop at 57. We did come up and hit this next objective. So we've got nice trade going on. We've made 1 point on 4 contracts, and we've made 2.5 points on 2 contracts, and we've locked in another couple of ticks on these other last 2 contracts. So if we can get lucky, the market will continue to move above this area here, which is likely going to act as resistance. It's the high of this high velocity move. You can see we've got one of our trade location zones in here, just below the 1860 level. So hopefully the market can come and it pierce through this area in here, which will be natural resistance for now. And should it be able to do that, then then we're going to have a really nice trade in our hands, at least on the final 2 contracts. So I think what I'll do here is just go ahead and put the this on pause, and we'll get back to the live recording of this trade as the situation develops. Okay, as you can see, the market did get up into that resistance area, and it has backed off. It's obviously very, very close to stopping us out on the final 2 contracts. We just have a couple of ticks profit on them. I'm being very, very lenient with my stop on these last 2 contracts, with the final 1/4 of the position, because a little bit of a different mentality with that. Okay, there we just got stopped. So just a couple of ticks profit on the final 2. And I can cancel this order right here. So as you can see, though, that what I went ahead and did is I just put in our email there if you want to contact us. But this particular trade, I went ahead and took a 1 point profit or 4 tick profit on the first half of the position. had a nice profit of 2.5 points on 1/4 of the position, and then the final fourth of the position, just a 2-tick profit. So, the first objective, at least the way that I decided to manage this trade, I wanted to have just a reasonable, a very minimal kind of profit, just a 1-point profit on the first half of the position. So just in case the market would move against me, then I could adjust that stop and basically make what I lost. So overall break-even sort of attitude on that first objective. Now the second objective, that was a 2.5 point profit. So I wanted to try and make a little bit more than just kind of the minimum. I mean, make 2.5 points on a trade. That that's a pretty nice trade. And that's where a lot of times the bulk of the move is, within perhaps a 4-point range, that kind of thing. So to make 2.5 points on that is nice. And then we had so the philosophy is a little bit different for these three exits. First one, pay the bills kind of thing. Second one, reasonable profit. Third one, if it really moves in your favor, you're on board. Well, this one did not, but we still ended up with a little bit of profit on that final partial. So that was really the thinking on why I had placed the exit orders and the stops in those particular three locations. I hope you enjoyed it. I'm Dave Johnston with Day Trade the Markets, and if you have any questions, comments, whatever, you can just get a hold of us right here on this email. Thanks for watching, and that's it for now.